Hey, what's up, everybody? It's Stephen A. Williams, president and founder of the creditrepairshop.com, and I want to talk about a topic that's very hot right now. It's 1099-C, cancellation of debt forms. If you've done any types of settlements, if you have had a loan or you borrowed money and you didn't pay it back, and the debt collector or the original creditor has chosen not to come after you for the money, or you had a settlement and they're just not going to come after you for the remaining amount, it doesn't just disappear. This is a form that the creditors or debt collectors will fill out so they can make a claim against the money that they didn't collect. And what they're going to do, in short, what they're actually doing is they're reporting that money as additional income to you. And people are shocked when they get the form. They're like, what is this 1099-C cancellation of debt form? And it has an amount on there. I can understand that I can get a cancellation of debt because, they didn't want to come after me for the money anymore. But now it has this money amount on there. Where did this come from? That came from the discount that they gave you, or if it was just a total write off. And the problem with this is that it could be a total shocker to people because you actually have to include this as income unless you know the following. So, first, let's just read through it. I just found an article that we can go through. It says, what does it mean when you receive a 1099-C form form from a creditor for a canceled debt? When you use credit or take out a loan that borrowed money is money you can use. So they say you use that money. If you don't pay off the creditor loan and the creditor cancels the debt, you may receive a 1099 form, 1099-C from the creditor. The C in the form stands for cancellation of debt. The IRS categorizes the credit you originally received as income. This means if the canceled debt was over $600, you need to report the 1099-C on your taxes. So you'll usually get this form from the IRS. Sometimes you'll get it. You'll also get it from the creditor. Now, let's just skip down here. Don't be alarmed. That's why, because everybody is emailing me. They're posting comments on YouTube. My YouTube videos have blown up again that I made years ago with the 1099-C. So I wanted to make this one here just to kind of get into it quick about calming people down. Don't be alarmed. Right here. If a person is insolvent, there is no tax liability for 1099-C. So you might be saying, what is insolvent? I'm working. I'm not, I'm not bankrupt. I'm going to work every day. So what does insolvency actually mean? So if we skip right down here, they just gave a good example. For example, and I want to bring myself back up here. Why do I want to take myself away? Um, it says here, for example, if you have assets worth $12,000, but you owe 20,000 in debt, you are insolvent. That means that you don't have enough assets to pay your debt. You're upside down. The value of the assets is determined by what price they would get at auction. So we all know that regardless of what you buy, you can buy a new car today, and as soon as you drive it off the lot, it's worth less. So when you look at everything, it's going to be less value. So people rarely ever have to pay anything with these. Only time that I've ever had individuals that had to really even include it to pay any, and they really didn't have to pay anything because they were able to write it off, are the business owners that I've done settlements for. Comes to mind one, and he just called me the other day. He started getting some of the forms. We settled a little bit over $100,000 so far in debt, and he only paid, I think, just off the top of my head, $30,000 on the $100,000. And we have a couple of more left. So they sent over $70,000 or up to somewhere around $70,000 in 1099-C cancellation of debt forms to him. And he was like, what am I going to do with this? What am I going to do with all of these? They're saying that I made, this is like almost $70,000. And I said, cool down. First step is your insolvency, and he doesn't have, he's on the rebound. He still has his business, but he's rebounding. So there's no worry right there. He still has a whole bunch of write-offs. We had one write-off where this person, Russian guy, had wrote over $136,000 in bad checks to him, where they all bounced. And he's a diamond seller, and the guy took the diamonds, and he lost the diamonds and the checks over hundred some $1,000 in bad checks. So it's taken us a while, over a year, and I think more than a year and a half, on working on these settlements for him, because he just didn't want to file bankruptcy, because he has the business and he felt that he would rebound at some period of time. So if you look here, that's a good example, and it says the amounts of debts you have include all debts you owe, mortgage, auto loans, and outstanding bills. So even with stuff that you might have paid off, it's what you could get in an auction, and then all of the liabilities that you owe. So you would be insolvent. And if you look right here, there's a publication. I'm going to put a link to this publication right here, and that right there will show you. It will give you a. Let's just click it real quick. Give you like a little breakdown and explain everything from the IRS. So you can see right here. Pull this up. So you can see here it's Form 928, and says reduction of tax attributes due to discharge of indebtedness. And so you get to write all of this stuff down, you fill it out, and you would see at the end that you don't owe anything. And you just end up including this with your taxes. That's all you have to do. You just include it. Basically with the IRS, a lot of times people get in trouble simply because they didn't file the paperwork with them. The number one thing, if you owe money, or if you have a question with something, is that you need to sit down with a tax person. And I'm not a tax person. I want to make that clear here. I'm just giving you the information. But you need to submit the information to the IRS, because if you don't submit stuff to them, that's when all of the problems start to arise. Is people just disregard stuff. Don't disregard those 1099-Cs, because they'll end up having you owe taxes, and then you're gonna have to go around a second time trying to prove that you were insolvent. Take care of it right now, right at while it's fresh. Uh, Turn in the appropriate paperwork. Sit down with a tax person, uh, professional if you can. But it's really self-explanatory. I mean, it's just filling in some information. Just read through it, take your time, and fill it in. All right. Hope this was helpful to you. If you have any problems with 1099-Cs, this was a nice quick video, and it gets right to the point. If you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, What Makes Us Different, where I show you the way that we repair credit. And we also help people with settling debt, or just, give you some consultations on what you can do to settle debt. Links are below this video. Also, real quick, make sure that you like my channel. Make sure that you like this video. Make sure that you hit the notification bell to get notified of new videos that I have released. If you need your credit reports and scores, please go to the website www.your3scores.com, and you'll get all three with the scores. And you can also see on there that they canceled the debt. And then if you find yourself where you need to respond to debt collectors, they might have debts that are past statute of limitations or debts that are not. I give you 3 different documents that you can use to fight back against debt collectors. The links are below this video. Thank you for your time. This is Stephen A. Williams, President and Founder of thecreditrepairshop.com.